Right, legends. So welcome to the top down breakdown video. Okay, where I'm gonna use dollar card as an example and break it down and give my reasons to why I think there's gonna be a big move happening in there, and give all the reasons to support that idea as well. Okay, whether it works or not, that's up to the market to decide. But I'll put my case forward and we'll see. So dollar card will be the example we use today. So normally when I'm breaking the market down top down, I like to start off with a yearly chart, and the platform I use for that is TradingView. So it is premium. You have to pay for a bit, but I'm not sure of any other free ones. But I use TradingView. We'll start off with a 12 month. So each candle here represents a yearly candle. Okay, each 1 year each candle. Okay, so I'll start off there just to get a bigger picture. Where are we within the yearly? So where we are within the yearly, we are above the yearly open. Okay, so far it's been bullish all year, but at the same time we're into resistance. What resistance are we into here? Okay, so this was the down move that led to the move up, took out the stops here, then broke down, then it pushed right back up into this yearly uh, candle here, the breaker, yearly breaker, and it's acting as resistance now. So let's mark that out. Okay, so we've got that there, and that comes in at, so actually I'll actually box this out because it'll be clearer for later on. Here, the yearly breaker. Okay, that's that there. So far we've had a good reaction. We've got a high, higher high, lower high. It's like a swinging form. Yes, this is pushing up, but it's starting to react now nicely off of it. So we can say, well, we're coming off of resistance, but we're above the yearly open. So what do we do here? So to gain more clarity, I'll break it down. So I'll just identify where we are on a yearly basis. Okay, and also I like to have the yearly open marked out. So for later reference, if it ever does come below the yearly open, then we turn bearish for the year. So the open comes in at 125,793. So 125,793. 793. Okay, I'll do that in different color. Let's do it in there. So we know when this purple line represents the yearly open. So then I'll break it down to the 6 month. Okay, 6 month. Okay, similar thing here. We start to break down. So we got a swing high in place. Nice reaction off of it just so far. Previous 6 month candle was a bullish one. What did we do? We took out this 6 month high here. Right now we are at the 6 month open. Okay, we're at the quarterly open. So no, 6 month open, half year open, sorry. What is happening here? So we're at the open. We've just started it. We're only about 5 days into it, so not much to tell yet. But on the 6 month, we can see we've just taken out some stops. Well, here, so these stops have been taken. And what do we like to see? We like to see a stop run into a key higher time frame level, then a rejection. So let's mark that out. This high comes in at 141.91. So 141.91. Do that in black color. Okay, that is a stop run there, pushed right into this block here, and reaction. That's what we like to see. A sign of a stop run is a quick move into a key level and taking out some stops, then rejection. That's good. Let's break this down to a quarterly there. And this is where we start to zoom in more and more and more. Once we know where we are in the bigger picture of things, we start to focus more and more in. So on the quarterly, we got a high. We can see more structure being built now. We got a high, we got a low, we got a lower high, lower low. So far so good. So what do you expect if we're bearish? What do you expect? We expect a lower high. So that means we need to see this high hold. Agreed? This high hold and push below it. Now you can say, well, if this was a 5 minute chart, you would wait for, or a daily chart for example, you'd wait for it to break below the open. Okay, now you can wait for that, but on a macro basis, then you'd have lower targets. But we're not going to wait all that time. We're just building our case for it. We are within this block here. Okay, a quarterly block. Okay, so far so good. High, low, lower high, lower low, lower high so far off the key level, and that's what we want to see. That's that breakdown. Let's zoom in further. Can we gain any more clarity? 1 month now. Now we're going right into it. Okay, you can see things a lot more clearer. We have just come up into what, a monthly block here. So the same thing I've just shown on a yearly, we're just doing that on a monthly now. We've taken out stops here, stops there, and last month was reacted off it so far. Okay, so far we're getting that bearish reaction we want to see. This also, what I'm noticing is we've got equal legs lower, so to add further confluence, I'll start throwing in harmonics even. Now you don't have to do this, but it's like an extra factor of confluence, and it hasn't really come into it yet. But notice the price behavior. Fast move down, but then look at the slow move up. This is the difference I see between a corrective movement and an impulse move. This fast move down is more of an impulse move. This move up is more of a corrective move. Fast move down, corrective, slower move up. Notice the similar patterns unfolding. So far on a monthly basis, if I wanted to short this, this would have to hold. So the monthly so far is sort of lining up that there could be a possible high in place. Okay, now I'll break it down to the weekly. Okay, so the weekly, I can break that monthly block down to the breaker here, which is, should refine a bit more, the down move that led to the move up, took out these stops, and then dropped. So any pullback into it, we expect what? Selling. Okay, as long as this box now holds, we expect it to act as resistance. So to refine that further, I like to draw out 50% of that breaker. Okay, so let's draw out 50% because ideally that's like the max we want it to go within a breaker. Okay, lo and behold, we have 50% here. Okay, let's mark off 50%. We've just touched it, and nice perfect reaction. So we don't really want to see it go above that. That's the maximum we want it to go as much as, and then reject. Okay, notice also previous month's candle, June, has taken out May's high, closed bearish, and broken close below the previous month candle. That is a sign of, that is now confirmed as an order block. This, okay, so any pullback, we expect this high to hold, to expect more selling, because if we're true, then the market makers were selling in May as prices were moving up, and then June candle was bearish, so any pullback into the bullish candle is going to be selling opportunities. Okay, also, what is this thing I just said? We like to see a stop run into a key level. Well, what have we just had here? Stop run. Okay, this high was taken and pushed up above that. So what do we do from here? Well, you can be aggressive and look for shorts earlier on above this high, or you wait for market to get below this high here. It's a range, isn't it? That high to this low is a small range we're within. So if it comes back below this high, that shows that this was a deviation of the range or a stop run coming off that key level. So for confirmation, you'd wait for price to come below here. That's if you wanted to play it. It's up to you how you want to play it. Okay, so far so good. Another thing is, I think this was what I was trying on about, is that this is the harmonic move I was on about. I don't know why I was on about the other one. Let's mark at equal legs. Let's clone that. So I'll probably see it better on the weekly, but clone that line. This is just adding further confluence to it. Okay, I don't always use this, but it's just further confluence. We can see 3 equal legs up. Okay, that's very very nice confluence to have. Okay, a harmonic movement up, equal measured moves. Okay, into the key resistance level. So it adds to our case for possible reversal in the market. Okay, and a big move. Okay, so let's break it down further. So we're on the weekly now. Let's break it down further to the daily. Okay, now on the daily we can see we've pushed up. That's consolidation here. Okay, so this consolidation here. So let me just get rid of this breaker. So I have to keep the charts as clean as possible. This daily. Okay, consolidation. See this candle here? So if I mark this out like this, here it broke it and closed below it. The next day it retested it and then smashed down. So look where we're finding support. It's no surprise that we're starting to find support here right now. Okay, don't be surprised with that. So I'm going to go switch back to the MT4 chart, so I'm more comfortable with that, but I wanted to use this for showing you how we do the top down on a from 12 month to 6 month to 3 month. Okay, breaking it down. So let's quickly switch to this and break this down now. Okay, so same levels again. Okay, this is where we are, and this is that monthly level. Okay, it's that monthly level I just showed. Okay, now focusing on this, right? Why is this so important? Let's mark out the range we're in. So this was the highest point made, and then this was the lowest point made. Okay, so when we broke below it, we retested that and sold off. No surprise that we're finding support here. So if you want confirmation, or if you want the trader want confirmation, you'd wait for a break below here. So there's two ways of playing this. One, when we retested this, which candle caused this leg down? Well, it was this candle, wasn't it? And we spoke about this level previously. Okay, acting as a possible resistance. How do we know they're gonna hold this level here? We wait, because at this time, how do we know if it's gonna hold? We don't exactly know if it's gonna hold exactly, but we wait for confirmation. Okay, if you're gonna be conservative, you wait for a breakdown. There, it pushed up into it and made a lower low. Excellent. Okay, so how do you play this now? Well, there's two ways. One would be wait for a pullback into there, because we don't know, is it gonna sell off from here exactly, or is it gonna pull back into there? I'd wait for a minimum pullback into there if I'm looking for to short into higher prices. Then I'd wait for a weakness. I know I'm wrong if price moves back within this range here. Okay, we've consolidated, broken out, retest, and expanded. We don't want price going back within a previous range. When it breaks out of a range, we want the expansion, new range, expansion, new range, expansion. Okay, we do. If it goes back within here, then most likely the idea is off. Okay, so one way is I'd wait for there. The second way is using that key higher time frame, weekly, monthly level. Okay, the monthly range. So this is the whole range. Okay, from that high to this low. If we break below here, then all this price action, so if you break below here like this, then all this price action above this was a stop run or a deviation, and then we can go in with further confidence and start shorting the underside once we reach back below here. Okay, so it's just about gauging where you are within the bigger picture. When you know where you are within the bigger picture, when you know where market most likely to move, the entries isn't the hard part, is where is it most likely to target. Okay, is everybody clear with that so far? So what I'll be looking for, that was the first entry. The conservative entry would have been, okay, what's the new range that's been forming? So if I go down to this time frame here, we've got this low here. So the lowest point made once we retested that was this point here. Okay, was that low there. So if I do this here, I'm doing a different color, so let's do green. Okay, what's so significant about this level? This is the lowest point made. Attempted to go below it once, twice, failed. It's a solid support being built here, building confidence. We know when that breaks, using basic support and resistance, okay, nothing special, we short the underside of it. But what's so significant when we break this level, it's not just a H4 H1 level, it's that weekly level. Okay, so the odds increase. So say you're already short from before, this could be like a compounding opportunity. Okay, and then once we're within this range, and once you've got that macro bias, so if it's taken out one side of the range, where are we targeting next? The other side of the range. So what's this? This is the range high. So this is exactly how I would play a 5-minute chart. If price action is fractal, it should be the same for a weekly chart or a monthly chart. It just means it'll take longer. That's what it means. But when you got that macro bias, okay, you can day trade towards it. Okay, you don't have to hold it, but you know where price is, where the flow is, where it's most likely to reach or go towards. Okay, is everybody clear with that? So then I look for other cases. This one thing is price action. Is there anything else that supports it? So the only things I look at are interest rates and COT data, commercial positioning. So going back to this chart again, okay, to support or give me a further argument for this case. Okay, I'll look at the yields. Okay, so I'll look at, I don't know, the Canadian 10-year government bond yields. Okay, so again, let's start with this. I'm going to start off with a quarterly chart. Okay, actually start with the yearly chart. What's happening here? So on the yearly, so far, you know, we are above the yearly open. It still is bullish. Okay, let's break this down to the 6 month. Do we have much to work with? Not much. I mean, we're below the 6 month open because it's just started, but we are into this resistance, but it's not too much to go. We could say, well, could it sell off from here? Well, let's see if the quarterly gives us a clearer picture, and this is the picture that really clarifies things for me. Let's focus now. What's happening? Breaking down this like we do like a normal FX chart. We've got this here. Okay, let me just make that a bit thicker. Clearly see this was the low. Once it broke, retested it there, meandered around, but then broke back below it, retested it, retested there. Once it closed above it, this then proved to us that this was all just a deviation. Okay, a stop run. So if that's a stop run, what was the range high? The range high is here. Okay, so if this is the range low, range high, when it comes back below one side of the range, it goes back within it, above it, and that means the stops are going to be resting there. Okay, so what else do we have to work with? Well, we've got, once it closed above, did we know it was going to stay above this? We didn't, until it retested it and rallied. When it retests and makes a higher high, that shows us that the buyers have stepped in and we form an order block. What's the order block formed? It was here. Okay, this shows us that this down move, that this push up, proves to us that the buyers have stepped in. Okay, so now we're confident we should be pushing towards there now. Let's break this down further now, and I'm going to focus on the candle closes and opens. Okay, here, look at this. So considering where we are with price action, okay, where I've just broken down price, I can sort of get an idea that this may not want to have a deep pullback, because the sell-off in dollar CAD looks like it's imminent anytime soon. Okay, look at this, the close there, the close there, the open, the close, the open, the close, very, very similar. Here, last quarterly candle was the first time that it closed above. Now ignore the wicks, the volume is in the bodies. Okay, this I'm seeing as a deviation, or just to screw people over. It closed above it. That is, for me, is a very, very bullish sign, keeping in mind the bigger picture, the bigger context I've just explained. Okay, from this range to this, just because you've got one bearish candle does not negate the case we built so far. Okay, I'm seeing this as a trap now. Just like, for example, here at one point when this closed, that was a full-on bearish candle. It took out 1, 2 quarterly candles, closed within it. Normally he said, okay, stop should go above there, target there. But look what he's done. He said, screw you, it's gone up again. I think he's trying to get bears in again, but it's this close that can't lie. So I know I'm wrong if he closes back below this black line here. Okay, or I want to say below this candle low here. I want to stay above it, sorry. So you can say, well, if I'm not confident, you wait for the quarterly open strategy. So that's the open. So let's mark out the open more accurately. The open comes in at 2.203. 2.203. Okay. Okay. Let's break this down to, say, the monthly now. How's that looking like on the monthly? Well, on the monthly, this is a monthly open and a quarterly open, because we just started the new quarter. So let's see what's happening. You can just get more of a picture of what's going on. The down move, pull back, let it move up, find support there, consolidation, breaks above it, find support there. We're expecting now expansion. So you can say, well, let me wait for either a break of the monthly open, okay, to confirm. So far it's so good. We're still reaching for that target there. Let's see if the weekly is giving us any clarity. Well, the weekly is even better now, because we can see a swing failure on a weekly basis. You see this swing low here? We've just taken out a weekly swing low, full on bullish candle, reversal candle, okay, and close within this weekly candle. So that's a So the next stops will be resting above here, short term, but this alone is a bullish formation on a key support level. Okay, higher time frame support level. So everything is aiming for short term these highs here. Now you could be conservative and say, well, let me wait for the open. That's up to you. But so far, can you see how even the bond yields are lining up for our CAD strength idea or dollar CAD weakness? Okay, so it's just adding. It's like a jigsaw piece or jigsaw puzzle, adding all the pieces together to support your idea. So the more pieces you have put together, the clearer the picture becomes. And this is what I look at to add further confirmation. Okay, it's a macro view. You can do it once every now and again, once a couple of weeks, once a couple of months, whatever. But these big killer moves, you start anticipating them from beforehand. Okay, so if this is the case, I want to see this low hole now. Okay, start pushing up on a daily basis. How does this look like? Well, it's starting to look quite positive. Okay, so it's starting to pull up, taking out this, starting to push up. We got a swing high here, so we got a high, a higher high, lower high. We've just taken that out, and I'm considering this here as a breaking market structure now. Okay, you can still be conservative and say, well, let me wait for the weekly open or monthly open to get above the monthly open, then I can get in. But I'm considering this as a breaking market structure. We've taken out the stops here, broken market structure. There's no need to come back below this. Okay, again, further adding to Canadian strength. So if yields go up, the currency strengthens. Okay, that's that. The other further case, so I've broken that down, so that should be enough for that. The other case I'll throw in is the commitment of traders, the COT data, the commercial positioning. Okay, so I use barchart.com. It's completely free. I'm sure there's others out there you can use. So I'm just used to this. So I'll go to Canadian dollar. I'll go to interactive chart. Okay, and then I'll oops daisy, go back, sorry. So I'll go to Canadian dollar. Canadian dollar, and I'll pick the one with the high September contracts, the one with the biggest volume. Okay, September contract, and then I'll click interactive chart. See, I've already got it up, but so normally it's the chart's not set up like that. But you normally what I do is I'll go to settings. No, oops daisy, and you can pick what kind of candlesticks you want. I pick candlesticks hollow. Okay, that's the one I pick. Applies. It's already set to it. Okay, and then study. So imagine that's not there. I'll go to type in commitment of traders. Commitment of traders there. I get commitment of traders there. And I cancel the small specs, so I click on that and it removes it. I cancel the large specs, I click on that, removes it, and I'll click the large commercial positioning. I'm not interested in small or large, I'm interested in commercials only. Okay, and then I'll add that to the chart, and then I'll see. So then I'll probably go to weekly or something. Is this agreeing with my case to add to my CAD strength week? Is this agreeing with it? So for the tools, we can clearly see this is pushing up, can't you? The heavily loading, and this is just the CAD dollar. This is the Canadian dollar on its own, not dollar CAD. CAD on its own. Okay, so it would be the inverse of the dollar CAD. Okay, so far so good. Is it coming for key support? We've done the analysis for the dollar CAD, so it's the same thing anyway, but we'll do it for this. Tools, we've got this here. We're into here. This is the whole down move, led to the move up, retesting it. We've also taken out stops, so I'm just doing the same analysis again. Okay, there. So what would confirm it would be, so you see the great thing about this is you're not in a rush. You got plenty, you got weeks and weeks to get it right. Okay, you got weeks to wait, let it unfold. You know, you spent ages wait. It's a macro basis. Okay, so you can wait for a close above this before you even step in. You can have this ready weeks in advance. Once it does what you expect it to do, for example, in this case, if this was a 5-minute chart, I would wait for a close above this to confirm. Okay, back above this, which would prove this was a deviation, so I could wait till next week or the week after. I know if it's a macro basis, I don't have to stress because it's massive targets. Okay, hundreds of pips or thousands of pips. Okay, so I can wait. That's so fine. And this is the nice thing about it. So this is agreeing with it. So technicals agreeing with it, commercials agreeing with it, the yields, we got a good case for the long yields. Okay, price is agreeing with it. So I tend to go to the technicals first, okay, price action to confirm it. I can, because the commercial positioning, for example, say going back to this, while this was dropping, until when you see it like this, right, and this dropping, you can clearly see the commercial increase in the lungs, but is price agreeing with it? If price, until price agrees with it, there's no point entering it. It's an alert, but price has to confirm it first. Price comes first. This is just a confluencing factor. I see it. Okay, like it looks at the yields. They can take ages before it affects price, but yields and COT data and anything else or seasonals, they are just confluencing factor. Price has to agree with it, and when you've got these confluencing factors agreeing with price action, it's like a green light. It's a solid case for a macro move. So then it's down to you. How do you want to play it? Do you want to day trade towards that target because you got a clear higher time frame bias to work towards, okay, where the flow is in sync with the higher time frame flow, and whenever you're in sync with the higher time frame flow, that's when you get the big moves. Or you can start position trading. So I know a few that have got a position there. When they get a new invalidation level, they can trail the stop, add another position. So in the background, they can have swing trades going on towards that key level. I mean, I think it's gonna go a lot lower, but this is just a minimum target. So from here to there, that's about 500-600 pip move. Okay, I personally do think, if I'm correct, right? If I'm correct, high, low. It's one leg. It's down leg. So if it's making a high, a low, a lower high, lower low, lower high, what do you expect? A lower low then? Okay, I'm actually expecting it to come down to about 1.2, 120.50s, but I don't have to aim for that. I can just get out a lot earlier, but I've got my bias now. Okay, so that's how I do my top down. Okay, and you can apply the same thing for any currency. Okay, it doesn't matter which one, Aussie dollar, Euro dollar, cable. Okay, you pick which one, but these big trends happen once, not all the time. So I think dollar CAD is ready for a big trend, and this is why, if everything lines up like this, then I'm more prepared for it. It's not a surprise, because sometimes you're sitting there thinking, oh, which one is going to be the move first? But if you prepare yourself, it only takes, how long did this take? It takes a couple of minutes. So once a month even or something, you can do this sort of stuff. Look at all the majors. Which one is lining up for a big macro move? Which one is into that key higher time frame level? Okay, and then when everything is lining up, you're prepared for it, instead of like waiting for someone on Twitter to announce it to you, or after 1,000 pips then you realize you already anticipated it. So then which currency pair is more better to take, okay, and take advantage of it. And that's what we look for as traders. We look for volatility, where it's going to be the bigger movement that's going to make us money. So I hope you enjoy that. Okay, any questions?